Oh, there we go. Thank you. It's always a scary situation when you push the record button and it doesn't come on. I will be checking questions. I will not be able to see questions while I'm doing my presentation. I will check questions when David is doing his, and then we'll combine the questions at the end when we're doing the stock review. So welcome everybody to the How to Make Money Trading Stocks Market Stock Talk show for Friday, the 17th of October. How are you doing, David and Harlan?
I'm doing great.
Okay. And so I'm glad you guys could both join us. It is early here in Hawaii. It's 7 o'clock in the morning. I have been doing my due diligence, getting up every morning at 3 o'clock for a market open at 3:30 so we can get out information to everybody. And it's if and when we do move back to Hawaii during daylight savings times, it'll be up in the morning at 3, and during the standard time, since Hawaii doesn't change their clocks, it'll be 4 o'clock. You get to sleep. I'll get to sleep in. How's that sound, guys?
More power to you, man.
Anyway, again, I'm Dennis Warren from the Active Trend Traders. We have Harlan and David Grandy. Well, not Harlan and David Grandy, but Harlan Payan and David Grandy joining us from All About Trends. We'll get going. All the material that we're going to be presenting today is for training purposes only. Traders should always paper trade any new method prior to the risk of their own personal capital. So just a little shot from where we're staying. As you can see, I love these sunsets with the clouds because these rays, I call them God's fingers because it's kind of like it just really is awesome. We're due to leave tomorrow, but we do have a little bit of excitement going on, guys. And here's what the excitement is. We have a tropical storm that's turning into a hurricane that hopefully will skirt to the south of the islands, but we'll see tomorrow morning. We're due to leave about 2 o'clock tomorrow afternoon, heading back for California. And but that's what we're looking forward to. And we lived in Hawaii back in the early 90s when a Niki hit, which was a very devastating hurricane. And so we are hoping that it stays within this cone of they call this the cone of confusion, or the cone of where it can't determine where it's going exactly. So it's going to hit somewhere in there. Thought you guys might find that interesting. Want to remind everybody that David and I and Harlan love to talk about stocks, and David and I will go anywhere, anytime, well, just about anywhere and anytime, right, David, to talk about stocks, and we would love to make a presentation to your group. We can either do it via webinar or we can do it in person. We will be down in February. We'll be down in Orlando, right, David?
That's correct.
Doing the money talk show, not the money talk, but the money show. And we have this really great presentation prepared, and it's called, what's it called, David?
The Art of Trend Trading.
The Art of Trend Trading, and because that's what we do. So let's get into today's discussion about the market. You guys ready? Here we go. Deeper into correction, the market went this week. I always like to take a look over down here to see. Let me get up my pencil and paper. Not my paper, but my, okay, where did it go? It should be up here. Poof, there it is. Okay. One of the things that we talked about last week is we called it deeper into correction, looking for a place to bounce. The trend channel was broken on the S&P last week, and we were living with an expanded top on the NASDAQ, which in fact actually broke out of that expanding top to the downside. Russell was extremely oversold this week. The big terms that we did find a place to bounce. Now what is the big question? Both the S&P and the NASDAQ have experienced, I think, a significant amount of damage that needs to be repaired and a constructive bottom or consolidation area formed, because we always look with Not a lot of trust if it just springs and just bounces right up like on a rocket ship taking off. Those are always suspect. One of the things that I will talk about a little bit when I get to the charts is the Russell itself. Russell has a tendency often to lead the market down, but then when it's time to move up, to lead it back up. And so we may actually, over this past week has been not the weakest, but the strongest of the indices. It found its support and made a really, really nice bounce up. We'll see that in the charts shortly. Outside influences, we have earnings in full swing this next week, as we saw with Netflix this week. A disappointment led to over $100 drop in Netflix, fell out of the sky and went splat. That's not necessarily it's normal for a weak market to get that amount of beat down for a stock when, they basically just missed a few subscribers they wanted to add. We've got worry going on. We've got Ebola going on. We've got European slowdown going on. We've got hope and change going on. Man, I tell you, we got so much things to be worried about that, yeah, the market's still swinging with those kind of wide ranges almost on a day-to-day basis. We have found a little support. Let's see if it holds going into next week. Let's go over here too, if I can. Let's take a look at what is going on with the, there's our buddy Tesla. See, it's still falling, guys. So that put's looking pretty good.
Resistance stands.
It isn't amazing. I marvel consistently at what happens when, I use the moving averages a lot for resistance, and they line up so often specifically with levels of resistance that are defined, horizontal areas of support and resistance, and the the trend line support and resistance. It's amazing how oftentimes those line up almost directly with the moving averages. So let's take a look at the S&P here. What we've got going on is pretty interesting in that we made this is Wednesday's hammer, and a hammer is a bullish reversal signal. And so we've got a lot of things, positive going on with the S&P in that we found a strong level of support, and look how it coincides basically right over here with this strong level of past support on a weekly chart. And I'm sorry, I'll see if I can get those out of the way. There we go. Strong level of support. We get a natural bounce up. On a daily chart, where are we going? We hit the 8-day moving average, we turn back over, and that is our current resistance, but also up here at the 1904 and the past resistance from the lower low here, the swing low, and then of course you've got the red moving average, which is the 200-day moving average. Currently the S&P is below the 200-day moving average. Of interest, if we close today where we currently are, on a weekly chart we will have a hammer, a big hammer at the bottom of, or basically at the bottom of a downtrend, which a hammer is a bullish reversal signal. We've got the stochastics looking low on a weekly chart. We've got definitely the true strength indicator looking extremely low. Momentum has dropped off the bottom. But we're starting to see a little bit of positives going here with both the true strength and positive divergence on the momentum indicator. Will that lead us to a rally going into next week? We'll see. We could fluctuate around down here and then bounce up, or we could come back and retest the hammer itself, and then bounce up. But as long as that hammer's in place, we have a rally attempt going on with the S&P. Let's take a look at the NASDAQ and see what's happening here. Something very similar again. Maybe a little bit more positive news. We dropped the uptrend line earlier in the week, but we have regained that. We dropped the 200-day moving average early in the week, but we never, well, we got a slight close yesterday that was right at the 200-day moving average with a nice little gap up. But again, look where it gaps to. And when you're doing your own chart analysis at home, these snapback rallies, where they bounce right back up into an old level of what was support now becomes resistance, that's where you can look for profit taking. You can look for, okay, that's where people are going to start getting short again. So if you do a counter trend trade, because some of these counter trends are tradable, I mean, you know, with really nice move. You look at TQQQ or TNA. They had a $5-6 run over the last couple of days. However, it's counter trend, so be cautious and take your profits early and just go the other way. Again, looking at a hammer on the weekly chart, with the charts looking like, well, true strength indicator down low, but it's into the lows that it's hit previously, and that's where it tends to want to turn around. But let's see if it builds a case to rally into the end of the year. The Russell, when I looked earlier, the Russell was stronger than the other charts. Not stronger from the aspect that it is below the its 200 and 100-day moving average, but we definitely broke this downtrend line significantly. But look where it runs. We get past the 8-day, hits the 20-day moving average, and rolls over. I look at this as being constructive, guys, because hitting this level, it's an assault on the 20. It rolls back over. If the 8-day will hold, then that may provide us that little bit of a pullback entry that we all like. We've had our first thrust up. Now we want to see if we get a nice pullback to around the 8-day, or maybe drop it below the 8-day a little bit, but then that second rebound, and that would be where we're looking to get into the positions on things like TNA and that kind of stuff. On a weekly chart, again, a bullish Harami for the Russell, which is a bullish reversal signal. So all within this full level is a level of support and resistance as it's popped up. Guys, that's what we've got for the market. It's given us a little bit of mixed signals, but we're either in a snapback relief type rally. At least that's the way I'd be playing it right now. But it has to, for this level, this support area to hold and then bounce up, that's going to be our first indication that we may be going back into a nice, stronger rally, and that's where we're looking to get in. So I'm going to pop up the questions. Any questions, folks? Okay, awesome. I'll be looking at questions now. David, are you ready? David?
I am ready.
Okay. I
am ready.
It always scares me when I call your name and you don't answer. I go, oh, where'd he go?
I think there's a little delay when I take myself off mute.
Okay.
I think that's what it is.
Yeah, to compensate for the delay, I'm speaking slower today. There you go, David. You're on.
Okay, so the roller coaster continues. Crazy week again. You never know what you're going to wake up to in the morning. I mean, we've woken up to the last 3 days. The futures on the Dow, I think, all triple digits, either up or down. So, we're still kind of feeling like this. But with today's rally, Roleads wants to know, how do you spell relief? And the answer isn't necessarily today's rally, it is your trading plan. That is what keeps you centered. We've been mostly cash during this time because, like Dennis said, we're kind of in no man's land right now where we've had significant pops and drops, and we're having another nice pop today, but we don't really have a clear direction yet to trade from. So we're just hanging out here mostly in cash. We're waiting for things to complete setups, both on the long side and short side, and we will take them as they trigger. And it's just a question of what's going to complete a setup and who's going to trigger first. But we have the capital to take advantage of that, and we have the emotional stability or emotional rest to be able to objectively take those trades, because we're not trying to predict every single move in the indexes day in, day out here. We're just waiting for them to give us a little clearer direction. So just to summarize our trading plan, we don't chase stocks, we let them come to us. We buy support, we sell resistance, we short resistance and cover at support, and we just trade what we see. Lately there's been a lot of stocks breaking support. There's also now stocks that are rallying back up to resistance areas, so there's a lot of good setups on both sides of the fence that I'll go through in a minute here. So 3 things in the market, we talk about this every week: uptrends and how to trade them, downtrends and how to trade them, and change in trend patterns. And we've got some good stuff on the uptrend side, we have some good stuff on the downtrend side. Last week we talked about could now be the time to buy breakouts. We don't typically buy breakouts, stocks breaking out into new highs, as we, again, we don't chase stocks. However, when you have a market that's so oversold, and you have stocks that have formed breakout patterns that are very close to support, that's really the best time. And we featured Gilead and Celgene last week, and both of those broke through support and now are stocks that we're considering on the short side. But there are some other stocks that have formed breakout patterns that are looking pretty good, and Zoe's Kitchen is one of those. You can see a nice little cup with handle here. It's starting to pull back, multiple levels of support, the 50 days right here, and a break of this pink line will be our trade trigger. So we just like to see this pull back a little bit, and I think what's probably going to happen with the indexes is, we talk a lot about first thrust up patterns. These are stocks that have been in downtrends for a long time, and then suddenly they make this violent big move to the upside, and then they gradually consolidate. Just what Dennis was talking about with the Russell, where the Russells come up, and it's met resistance now at the 20-day. It would not be unusual for the Russell to consolidate here, perhaps back to the 8-day, like Dennis was saying, and then move higher. And that's what we want to see in a lot of names and in the indexes for us to really feel good about going on the long side. And that's the same thing here with those. We have this rally up to resistance, and now we wanted to see it pull back here towards support at lateral support and the 50-day moving average, and then break higher, and do that in conjunction with the indexes. So that's the combination that we're looking for. That's really the best time to buy stocks, is when the stocks have rallied to resistance, pulled back, and then burst higher, and the indexes have done the same thing. So the other pattern we look for in uptrends are pullback off highs patterns, stocks that are in clearly defined uptrends above the 50-day moving average, and they're making pullbacks to support. And believe it or not, there are still some stocks out there that are still in uptrends that have not broken support. GoPro is a great example. This is a stock that had a nice rally here off its breakout, almost doubled in 6 weeks or so, and has pulled back, and was kind of stubborn at first, wasn't really giving back much, and then it kind of succumbed to the extreme volatility and extreme oversold conditions in the market last week or this week. And but you can see it's a nice little pullback pattern here, and again, we'd love to see it pull back here, retest this low, and then break above the pink line where we would initiate our long side trade. So this is definitely tops on our watch list, and hopefully we'll get that further pullback here first. Okay, so for downtrends, it's the same pattern as uptrends, just flipped over. It's called pullback off lows. This is where we're looking for our stocks that have broken through support and are rallying back up to what used to be support is now resistance. And there's a lot of stocks that have done that with the sell-off. So here's Celgene. We featured it last week as a possible breakout, but it didn't. Instead, it broke through support, and now it's rallying back up. And we've got several resistance levels here: lateral resistance, the 50-day, and trend channel resistance. So we just want to see this complete this pullback off lows up here, and then break down, and that's where we'll initiate our short sell trade. And there's lots of stocks that have this pattern out there, but they just need a little bit more chart time to basically complete their patterns, and then we'll take care of it. So right now, we're pretty much cash. We have 2 positions open. It is a market of stocks versus the stock market. There's lots to do on the short side. There's lots to do on the long side. It's just a matter of what's going to trigger first. So in the meantime, we're just going to hang out and let the market show us its hand, and it's always going to be about what's happening with the charts of leading stocks, and when they start to trigger, we will be ready, and we'll start sending out trade alerts. So so just a reminder, we have a 15-day free trial if you'd like to see what we do every day. The only day we don't send you something is Saturday. So every trading day and on Sunday we send out a newsletter that talks about what's happening in the indexes technically, as well as leading stocks. We educate you on the patterns that I just went through. We have a watch list of stocks that have formed patterns that historically yield nice short-term gains. And when those trigger trades, we send you a trade alert. We're buying so many shares of X stock at X price, and then we send you a lock-in and gains alert, or if we get stopped out, we're sending that out to you as well. So it's very easy for you to trade in tandem with us and see what we're all about. And it's 15 days free, no credit card or anything. All we need is your email address that you want things sent to, and we'll take it from there. So that's about it, Dennis.
Thanks, David. And as usual, yeah, both you guys and myself, we have been patient over, it seems like several weeks, maybe even a couple of months, taking a little bite here and there, but we've been very patient in waiting for the stock market to do what it's going to do. And as you said, we do not chase stocks. We just basically wait for for the setups to happen, and if the setups don't happen, we don't take the trade. Here's one of the things that this is what we've done since we started our timing service with Active Trend Trading. So far, we've generated close to $14,000 in profits. This would have been on a $100,000 portfolio. Our margin account is up 25.9%. Our IRA account's up 47%. That's year to date. And all these trades are broken down, and I'll be updating that when I get back to California. I'm not going to be updating it until probably Sunday with all the trades that we haven't done. I think it's updated as of about a week and a half, 2 weeks ago, all the specifics on the trades. Did I show my screen? David, did I show my screen? Hello? Harlan, am I showing my screen?
You are.
Okay,
Profits
good.
and current holdings.
Yeah,
Thank you.
Okay.
Hey, I got a great email yesterday, guys, and it makes me feel so good. But Bruce sent me a great email yesterday, and what we offer at Active Trend Trading is on Wednesday evenings we do a training webinar as part of our subscription service, and we basically provide training on a specific technical aspect, the market itself, and just give a nice little update. Those hour training sessions are recorded, so members can go back and check it out later. But Bruce sent me this email yesterday, talked about our training and how it's really helped them maneuver through this rough spot in the market. And I really appreciate it. Thanks for sending that email on, Bruce. And this kind of gives a clarification on what our objective is. We want to provide a clear and simple trading system for busy people. So we will never be invested in more than 4 stocks in one ETF at any one time. Partly so that people can learn how to become wise, profitable, and winning traders. My motto is clarify, simplify, and multiply. We follow these 5 pillars: what to trade, when to enter, when to exit, what strategy to use, and what to expect. And we cover that, and we provide information on the website about that. Premium subscription. Premium subscription includes all of this, and we estimate that it's approximately a $300 monthly value of things you get from the active trend trading. And let's see. So basically, David, that's all I have. How are we doing for time? I think we're doing okay. Let me go back and check the questions, folks. Yeah, we're right on our. Let me. Got one question here that with 5 positions on it at a time, up to 5 positions, what percentage of your portfolio does that represent? Steve, basically what that represents, if we have pyramided into all 5 positions, that will represent anywhere from 100 to 150% of the portfolio value on a margin account. So, any other question? David, Harlan, you guys got any other questions?
Yeah, you know, when you were doing the talk about, was it Bruce or Barbara or something?
Yeah.
You know, the comments.
Yeah.
Let's go back to Barbara's just for a second, because this is really, I think this is really important, especially from an individual psychological standpoint.
I can do that. Can you see it? There you go.
Yes. Barbara mentioned that at one point in time, I'm going to assume it was the March and April correction that we saw, she was at a negative 40 at one point, and here she is back at break even. Now think about that once. This is really excellent from an individual person standpoint for their self-confidence. It shows you that you can get yourself from being in the gutter to being back on top of the mountain again. I mean, that in itself just gives you the confidence to know that whenever the wind starts blowing again, guess what? You're going to get through it.
That's right. That's right.
So in essence, you know, we all hear, you know, don't confuse brains with a bull market, rising tide carries all ships, and, you know, that's all true. But you really learn when you get through times like this. You know, there's an old saying, the fastest way to find out who you are as an individual is to start trading. You're going to find out really quick who you are and what you're made of. So everybody goes through this. Everybody, you know, and this just doesn't apply to the stock market alone. It's any endeavor that you take, because life is peaks and valleys. So, you know, personally, I'm more of the opinion that for me, I think you learn more during rough times than you do when the wind is at your back. Yeah. And that's what molds you. And, you know, you say, you know what? Yeah, I can get through this. I've done it before. I can do it again. So in that sense, kudos to Barbara.
Yeah, without a doubt. And, you know, that's absolutely phenomenal. And then my buddy Michael, you know, same type of thing. And when people report these things to us, Harlan and David, I mean, this is what we do this for in reality.
Right.
Whoops, I want to go back.
It gives substance to what we do.
Yep.
In the things money can't buy, mind you.
Yeah, and one of the things, and everybody who's online today, I want to congratulate you for another reason, is that the market has kind of turned ugly. And for many, this is the first time you've been in an ugly market. Let's say you just started trading this year. And I encourage you, you know, that you'll have this thought go through your mind going, well, you know, one, this isn't as easy as I thought it was going to be, and two, look at the market's falling out of the sky, and I encourage you to get through it. Stay in cash. If you don't have to trade to earn a living, stay in cash, paper trade, learn, watch, because I'll tell you, the debacle of 2000, I know Harlan was around for that. I think David was probably around for the meltdown in 2000, the meltdown in 2008. You know, we were there for that and went through that and survived and came out the other side, which is you know, which is the mark for traders that you made it through. But I'll just reiterate on the other thing that Harlan did say with regards to you will learn learning how to trade. You will learn things about yourself, because I think all the cracks in our psychology, cracks in our self-image, weaknesses and strengths come out blaring. I mean, I used to fly aircraft off of carriers at night, and in the daytime I used to drop bombs for a living out of the sky. And let me tell you, learning how to trade and get over
the cakewalk.
Learning how to
Well, it's a cakewalk compared to what you were doing.
No, let me finish. Is getting past and building the psychological foundation to allow me to become a good trader was more difficult than learning how to fly.
Wow.
And so, anyway.
Because it's overcoming your inner demons.
Yeah, exactly. So I'm going to stop the recording here. I'm going to basically, as usual, we say, you know, have a great weekend. Keep growing the egg. Trade wisely and profitably. And one last shout out. I had the opportunity to do a presentation last night for the Honolulu meetup trading group, and I just appreciate you guys and your hospitality. Mahalo to all my new friends, and we will see you again once we're back in Hawaii the next time, I hope. So David, you got anything else, buddy?
No, I don't.
Okay, I'm going to